Joining me right now is Hennion and Walsh Asset Management President and Chief Investment Officer. Kevin Mann is here. Kevin, good to see you. Thanks very much for being here. So how would you characterize the earnings season so far?
Well, as it stands right now, we have a blended earnings growth rate for the S&P 500 of just 1.6% for the third quarter. That would mark the lowest earnings growth rate since the beginning stages of the pandemic. Yet another sign that this economy continues to slow, and we all know that it's already met the technical definition of recession.
Right.
Plus, we still have an inverted yield curve, and the yield curve has inverted prior to every recession in our country going back to 1960.
And look at yields. I mean, you got the 10-year this morning at 4.1%,
Yes.
and increasingly hearing from managers about the macro story deteriorating. Jeff Bezos joining bank CEOs Jamie Dimon and David Solomon with a gloomy outlook on the economy. Jeff Bezos tweeted this, quote, "The probabilities in the economy tell you to batten down the hatches." What are you expecting from 2023?
You know, Maria, even though I think the economy is likely to spiral further, I do think there are opportunities for investors ahead. And I think we'll soon find out that the worst is behind us, at least as it relates to investing. We have the midterm elections coming up, and we know that going back over the last 60 years, the stock market has risen on average 16.5% the year following a midterm election. Plus, the stock market generally performs better when we have a divided government. In all likelihood, if the polls are correct, we're going to have a divided government coming out of these midterm elections.
That to the bank.
We can take that to the bank, right, Steve? Plus, Maria, if you actually look at what the Fed may do in December, if they raise in December by less than 75 basis points, well, that signals to the market that perhaps we've reached peak hawkishness. By extension, peak inflation, and the market generally rises following periods of peak inflation. So two tailwinds that could support more upside for stocks, even though the economy is going south.
Yeah, it's a good point. We are expecting 75 basis points in November, November 1st and 2nd, but maybe if December we start seeing a slowdown.
Just a little bit of a scale back.
That would certainly indicate that. You agree with that, Leo?
Well, I do. I don't think inflation is going to peak out soon, though. We still have residential pricing. We have rents that they're still coming online. That inflation's in front of us, not behind us, as leases start to come due and this inflation is starting to get felt. And what I have heard now for 2 years is transitory, under control, and every inflation number continues to surprise to the upside other than one.
Yeah.
So my concern is that the Fed is signaling very clearly to us they're not done. They're going to be aggressive. There's more to do. And, hope is not a strategy. I think I agree that there's investment opportunities, that next year is going to be better. However, I think if you're trying to do what has been done in the past, that's going to be a problem.
Well, I feel like, we're not getting any acknowledgement from the White House. I mean, they are still in denial about this economy and recession, so they claim. Press Secretary Karine Jean-Pierre shared her rosy outlook yesterday. Watch what she said.
Because of our economic plan, we are in a better place to deal with these global challenges, to deal with global inflation than any other, global major company, major country in the world. We think we are in a stronger place than we have been, than we have seen when we talk about a recession, what leads to a recession. He doesn't anticipate there being a recession.
Yeah, I mean, Steve Moore, obviously she's trying to distance herself from all of this, but the fact remains all of this spending, $5+ trillion from the Democrats, has stoked 40-year high inflation.
Maria, my view is that the Fed can't effectively combat this inflation until we get dramatic reductions in government spending.
Yes.
So since the beginning of the pandemic, the United States federal government has spent, borrowed, and essentially printed somewhere in the neighborhood of $6 to $7 trillion.
Wow.
And by the way, globally, that number is over $20 trillion.
Yeah.
So my line on this, Maria, is the new virus, the global virus, is out of control government spending.
Wow, that's a good point. Kevin, how do you deal with this? I mean, do you want to hide in any areas? Are you allocating capital in equities right now, even though?
Yeah, we're recommending a barbell strategy with some blend between growth value and defensive positioning as well. We like names like Amazon on the growth side. Amazon down 30% year to date. That's hard to believe given all their growth potential ahead, especially in the holiday shopping season.
Yeah,
and then on the value and defensive side, look at healthcare. Look at names like Merck paying a dividend of 2.9%, even AbbVie paying 3.9%. We think there are ways that investors can stay positioned in equities, take advantage of those tailwinds, but stay a little defensive if, to Leo's point, the Fed stays too aggressive.
Well, it's like the Fed is the only one, rowing the boat here because the administration keeps on spending, Tian.
And even with San Francisco Federal Reserve says that medical inflation is due to double into next year. You
That's
still
right.
think that those healthcare sectors are a good return?
Absolutely. Healthcare is of preeminent importance right now to society, and where do those innovative healthcare solutions come to combat rare and chronic diseases? The smaller cap biotech, and we've seen a pickup in M&A activity in that area.
It's important that you raise this, though, because inflation is cutting into the hospital's profitability. And I'm hearing from doctors that hospitals are having a real rough time because they are facing inflation from Medicare, and they've got to actually have pressure not to raise prices. So they're just eating the cost. The hospital sector is under severe pressure.
On top of that workplace shortage, because you did have all those nurses and doctors get kicked out because of vax mandates.
Exactly. Kevin, it's good to see you this morning. Thanks so much for joining us.
My pleasure.
Your morning movers, IBM. Take a look at the stock.